Good morning. We will pay attention to the note for the financial statements for fixed assets today. The information is given to us on the 1st of January 2015 that indicates that this is the opening balances. So in my equipment I have 150,000 and in the accumulated depreciation account at the beginning of the year 12,500. I will therefore show this 150,000 and 12,500 as the opening balances. To determine the carrying amount at the beginning of the year, I will deduct the 12,500 from the 150,000 to determine the carrying amount as 137,500. The equipment was purchased on the 31st of August. On 1 November, new equipment was purchased for 60,000. The equipment has an estimated lifespan of 4 years. We are using the straight line method for a period of 4 years. So if I divide 4 into 100, it means that our rate of depreciation at 25%. The original equipment was purchased on the 31st of August 2014 and the new equipment was purchased on the 1st of November 2015. We will calculate depreciation on the old equipment for the full year because this equipment was purchased in the previous year, and that will give us 37,500. On the new equipment that we purchased in the current year, we will only write off depreciation for 2 months because we bought it on the 1st of November. The end of the financial year is the 31st of December. So we will calculate for November and December 2 months, and that will give me 2,500. So although we have 2 assets, the old equipment and the new equipment, we will only record 1 entry at the end of the financial year for the total depreciation. Depreciation is an expense that will be debited, and the accumulated depreciation will be credited with the 40,000. In my accumulated depreciation account, I had an opening balance of 12,500 at the beginning of the year. So after the current year's depreciation is added, this amount accumulated to 52,500. So after the second year, the total accumulated depreciation is 52,500. We will keep on writing off depreciation until the accumulated depreciation on a specific asset equals the cost price. In the equipment account, we started with a balance of 150. On the 1st of November, we bought additional 60 Rand. So my equipment increased in the current year to 210,000. In the note, I will show that depreciation is written off as 40,000. This must be in brackets because depreciation reduces the value of your asset. We bought additional equipment for 60,000. That increases my asset, so that will be positive. If I deduct the 40 from the 60, the total movement is a positive 20,000. At the end of the year, I will look at my cost price of 150,000 plus the 60,000, and that will give me a total value of 210,000. At the beginning of the year, my accumulated depreciation was 12,500. I wrote off another 40,000 in the current year, so the accumulated depreciation at the end of the year is 52,500, when I add the 40,000 and the 12,500 together. To determine the closing carrying amount, I will use the 210,000 minus the 52,500, and that will give me a carrying amount of 157,500. I can also check this to make sure that I didn't do any mistakes. So the opening carrying amount is 135,500 plus the movement during the year is 20,000. So therefore the carrying amount is 157,500. Therefore it indicates to us that no mistake was made. This total carrying amount of all your assets at the end of the year is the amount that will be recorded in the balance sheet. Remember that accumulated depreciation must have a bracket around it because you deduct it from the cost price. It reduces your cost price, and depreciation written off in the current year must also have brackets around it because it reduces the value of our assets. What did we learn? We will calculate depreciation on old equipment that was purchased in previous years for the full 12 months because we use it for the whole year. On new equipment purchased during the year, we will only work out depreciation for the number of months that we use the equipment in the current year, in this case 2 months. Any additions to equipment will be added to the opening balance to determine what is the closing balance of your equipment. So what is your value of the equipment at the end of the year in your equipment account at cost price, and that will be your closing balance in the note. You will add the accumulated depreciation opening balance to the depreciation of the current year to determine what is the closing balance of your accumulated depreciation at the end of the year. And this total accumulated depreciation will be deducted from the cost price to determine the carrying amount at the end of the year.